Okay, can you guys hear me now? Sorry, I was just chatting away merrily. Had no idea that you couldn't hear a thing. Okay, let's share this now. Right, so can you hear me now? I was just chatting away. I thought you guys were enjoying the music at the beginning, and then I was talking, and I had no idea that you couldn't hear me. That is bizarre. Okay, well, I'm glad you can hear me now. So, whoa, so that means you missed out on 5 minutes of really, really good tunes. All right, well, hey, I'm a trading trainer, not a DJ. Cool. So my name is Israel. Let me repeat again. My name is Israel. I'm a senior partner here at Israel Keys Wealth. We started this pretty much. It started out as a free mentorship group. Just felt like passing across some knowledge and helping other people shorten the curve to success in trading. Last year, the feedback we got from some of the people in our free group was, "Hey, why don't you make this a full-fledged school?" And so we've just been taking it one day at a time, building and grinding. Um, Even our YouTube channel didn't really start out as a YouTube channel. It kind of started out as um, a plan or a place just to store videos that I wanted to show my students. And then, one thing's led to another. We're glad that you guys are on for the ride. Thank you for your patronage, for those of you who are registered, and for those of you who are not, who just come to YouTube to get the free stuff. We still value you. Thank you for being a part of the Israel Keys Wealth Academy community. So, having said that, let's get right to it. First of all, let's check on the trade real quick. Actually, you know what? No, I'm not going to check on that. We'll do that in the Telegram group for the registered students. But we took a trade yesterday just to test something. Actually, let's show it real quick. We took a trade yesterday just to test something that we were learning. I think what to do is show you the different stages of the trade. So 1 second. So this here is our paid Telegram group. We'd like to have you on it. It's small, but it's growing. We actually go hands-on and take things to the next level beyond what we show you guys here on YouTube. And so we said, after teaching some things privately, we drew out that level yesterday to say, hey, watch it. We kind of expect something to happen there. And true to form, we did get the reaction we were expecting, and so we dove into the trade. Now, I made it very clear this was a learning trade, so I hope none of you took it live, because I don't really care whether it wins or loses. We just wanted to test something we learned and see how that kind of reaction from what we studied a few weeks ago. If you guys remember the double manipulation zone, there it is right there. It's a double manipulation zone. There it is right there. And then, of course, the question was, what kind of liquidity profile is this? Well, the idea is it's a double manipulation block. That's the answer. So that is on a 30-minute chart, clear as day. And so 4 days later, which is why you have to be patient. Was it 3? 1, 2, 3. So 5. No, 1. Let's look at this again. It formed on this day. So 1, 2, 3, 4, 5, 6. So 5 days later, that zone comes into effect for our trade entry. Of course, we track the trade, and if you missed that entry there, it gave a second chance to come back in there again. So, and the trade, the next time I gave an update, it was on my mobile phone. So this is where we were at the close of yesterday. The question was to close or not to close. We chose to stay in. Again, so that was at the end of yesterday. That was where we were. Of course, we had a session last night. It was dope. Woke up this morning and this is where we were. So that's the progress on that. So let's get to it. Now, the last couple of days we've been dealing with, since Monday actually, we've been dealing with markets trading sessions, what they are, how they work. Yesterday, we looked in more detail at the Sydney session. And everybody who's coming in, good to see you, Ivy, Natalia. Good to see everybody. Even if you're not a registered student, just give us a shout out in the comment section if you're on. Just let us know your name, where you're watching from. We'd like to connect with you. Today we're looking at London and New York, specifically London and New York. So let's get those slides up real quick, just to remind ourselves, because I'm going to be working almost exclusively from charts today, not slides. But let's just remind ourselves real quick what we refer to when we refer to market sessions. So 1 second, let's just go through that real quick, just for those of you who haven't watched it. This is part 3, and so you do want to make sure that you see parts 1 and 2. Part 1 was just basically introduction to market sessions, when to trade, when not to trade. Part 2 dealt specifically with the Sydney session and the Asian session, right? And so this is a snippet from your manual for those of you who are paying. You're going to get with the market breakers course. So introductions, major centers, time convention, Sydney, Tokyo/Asia, London/Europe, New York/America. We're going to deal again with volatilities, the majors and the crosses, what to trade where, the advantages of trading Forex versus other markets. So, of course, this is basic. We're going a bit deeper today. Right. So, of course, we remember institutional traders. Yep. Yesterday's session, last night's session was the bomb. Institutional traders keep office hours. So they're trading roughly 9 to 5, wherever part of the world they're in. And so the 4 major centers are Sydney, Tokyo, London, and New York. In essence, when the traders in these parts of the world are at their desk from 9 to 5 trading for their banks, they're going to be significant characteristics in the Forex market. And so we've looked at them, obviously, between Asia, London, and New York. 83% of all daily transactions are conducted. And so we looked at the fact that yesterday we don't really, of course, we also time convention. We got to know what the time is in GMT, what the time is in New York, and the time is in London, because those are the 3 time zones we need to keep an eye on. Because time moves back and forth through daylight savings. So Sydney, we made the fact Sydney is just clear. Stay away from Sydney. That's the CBD hour, the central bank dealers range, according to a former mentor of mine. That's what he coined it. It's not my term, it's his. It's roughly 8 p.m. to 5 a.m. GMT. Price will be a consolidation during that time. Stay away from it. Asia or Tokyo, unless you're trading a pair with at least 1 and preferably 2 currencies that are either from Asia or Shona. So that's the Aussie dollar, the New Zealand dollar, or the Japi. Stay away from Asia as well. Now, if you're trading one of those currencies, you can trade Asia. But if you're trading a strictly European pair, Euro dollar, pound dollar, dollar CAD, dollar Swissy, or those 4 Euro Swissy, CAD, pound, whatever, those 4 European and North American pairs against one another, you want to stay away from Asia as well and use it as a range finder. And yesterday, we really went deep into showing how you can use Asia. Now, we didn't go all the way deep. We're going to do that in the private group, but we gave you enough to take your trading from 50-50 to 70-30 from what I said. Now, today we're dealing with London, of course. So you only trade a pair during the session times. That's the rule, where at least one or both of the currencies on the pair is or are in office hours. So if you want to trade a pair, ask yourself, do you have at least one currency in that pair where the home country of that currency will have people at work? In essence, the institutional traders will be at work. If the answer is no, stay away from the pair. You're going to have low volatility or manipulations, which is what we see usually doing Sydney and Asia sessions when you're trading a non-Asian pair. Also, the vast majority of significant trading during any session will happen in the 6 hours that start from 2 hours before the session officially opens. In essence, from 2 hours before the session starts to the first 6 hours of the session are when you will find the vast majority of your profitable entries. Anything past that time frame, be very wary of taking a trade. Right. So London, it's the center, the financial center of the world, period. The vast majority of all financial transactions pass through London. It also helps that London is roughly in the middle of the world time-wise. So it's half of the year, for more than half of the year, it's exactly GMT. And so it's the clearinghouse of Europe. It's the most significant financial capital in the world. That's just the way it's been for the Yanks. If you don't like it, well, we're sorry. That's just how it is. So now let's put in an indicator from yesterday to show what we're talking about. Right. So again, this is not my indicator. Took it off a mentor of mine. It shows you. Now that's, you know what? Let's go to the chart we used yesterday. It's already up on that one. Yeah, I think this is this it? Was this what we used yesterday? No, it wasn't. It was this one. Right. So, was it this one? I hate it when we start doing this. Let me see. You know what's fine. We'll just use this and we'll put the right levels on. Cool. So, London opens quote unquote at 8 a.m. in the morning. However, remember our rule. We start tracking from 2 hours before the session opens. And so this is where my famous advice comes from. Be it your charts from 6 a.m. to 10 a.m. in London time. This is where it starts from. Now, we looked at Asia yesterday, so we're not going to repeat Asia. But this is what you want to know. Coming out of Asia every day. Okay, actually, first of all, let me add this now. When you look at your chart and you see this line here, your brokers, whatever midnight is in your broker's time zone, that will be the daily divider. I want you to get into the habit of taking a line and dropping it at the end of this period here. 7 a.m. GMT. 7 a.m. London time. Right? Say 7 a.m. Sorry. 6 a.m. London time, I mean. 6 a.m. London time. Drop a line there. And treat that as the start of your trading day. Yeah, some of us are still buzzing about yesterday night session. Guys, just $79.99 a month. Just try it for 1 month. If you don't like it, you can walk away. It's less than the price of some people's dinner dates, but we do some great stuff in the private group. In essence, for me as a professional trader, this indicator marks when I start my day. Here. Now, some people call it midnight New York time. Some people call it 6 a.m. London time. For half the year, they're the exact same. For half of the year, when it's 6 a.m. in New York, it is 6 a.m. in London, it's midnight in New York. I just prefer to go with 6 a.m. London. That just works for me. If you like to go with midnight New York and keep that throughout the year, that's fine. We're only going to be half an hour away either way. I'm of the opinion that since it's the London session, I'm going to stick with the time it is in London. I'm going to keep the London time the same and move the time it is in New York. But whichever way works. This is the true beginning of the day. Now, I modify this concept of something I learned from a mentor. He calls it the true day. But this is how I think about it. If London is the most significant session in the day, then when London starts will mark the beginning of my trading day. In essence, I want to know what the price was at this time. And that is why I have that indicator there. What was the price at 6 a.m. in London? Let me repeat. That's the $1 million question. What was the price at 6 a.m. in London? One more time. Can we type it out in the comment section, everybody? So I know you get it. Type it out in the comment section. The first question you want to answer when you wake up in the morning as a trader, especially if you're waking up in a London-centric time zone, is what was the price at 6 a.m. London time? That question will save your trading life. Come on, somebody, type it with me in the comment section. What was the price at 6 a.m. in London? That level, especially in a trending environment, is going to be key for the rest of the day. Why? Because remember the rule. On an up day, we've looked at how candles form on any time frame, whether it's a 15-minute candle to a monthly candle. If it's going to be an up candle, it'll usually open up, right? Usually open up, we say, then it will dip, then make a high, and then dip to close the day. If it's a down candle, the opposite will happen, we say, right? It'll open up, find a down candle, it'll open up, it'll rise to make a high, run to the bottom, and then retrace to close. That's true of any kind of candle on any time frame, especially true of daily candles. So when you look at a daily candle, that's a down candle like this one, right? It'll open up, run to the top, come back down, retrace to close. For an up day, the opposite, it'll open up, come down, run to the top, and then come back down to close. 80 to 90% of the time, that's what happens. Well, if we understand that 6 a.m. in London is when the real trading day begins, then we're not tracing the same way. If you remember when I told you to think about a week, and I said to you, really, let's get the 4-hour candle, 4-hour time frame open. Come on. I said, don't start your week at this line because that's Sunday. Technically start it from the open of the third candle because that is Monday past midnight. Now, we're going to refine that slightly further moving forward, especially for those of you in the private program, because I'm going to move that a little bit. But for now, just think about it simply as the open of the third 4-hour candle from your broker's, what you call it now, your broker's weekly divider is the true weekly open for beginner. For an advanced student, it's going to be tweaked a little bit more. Well, in the same vein, on an intraday chart, like a 15 minute or 1 hour, let's get rid of this. The price at 6 a.m. in London, some say midnight in New York, is that reference price. In essence, first of all, on an up day, you want to see price make a low beneath that level. So this, for instance, was an up day. That's the price at 6 a.m. in London. Let me just make sure I'm correct with my Asian range here. Well, it's 5 a.m. We'll just leave it. It's an hour out, but we'll leave it. That would have been, it's an hour out. We'll just leave it. So again, 6 a.m. London, midnight New York. Work it how you want to work it. I live in London, so I just like to keep it at 6 a.m. But midnight in New York is also a very good way to do it, which is what this indicator is set to. I want my entry on an up day beneath that level. On a down day, I want the opposite. On a down day, that's the level there. I want my entry above it. This gives rise to a concept. Again, I did not coin this, took this from a mentor, did not coin this. I'm just going to give it to you as he calls it. The Judas swing. Now, he calls it the Judas swing because Well, it'll be 5 a.m. Monica, it'll be 5 a.m. at this time in London, but the times of the year where it is 6 a.m. There's times of the year where it's 6 hours between New York and London. And since we are staring at our charts from 6 a.m. in the morning in London, that's why I just prefer to keep it stable so that nobody's confused. But if you want to use midnight New York, that's fine. That actually is slightly more precise. It's called a Judas swing because it happens almost every single day. Not always, but at least 7 out of 10 days it happens, where unsuspecting traders wake up in London and the first move of the day will scream in the wrong direction. Remember, market makers want to generate liquidity, right? They want to generate liquidity. And so they are going to find ways to trick you. Look at this day, for instance, right? This is the time at 6 a.m. New York. That black line there is the time at 6 a.m. New York on the 11th of August. If you woke up in the morning and you saw this, and trust me, there were times in my past when I gave the market plenty of my money in the early hours of London chasing this move. We call it the Judas swing. Let's get that there. The Judas swing. A movement of price that is designed to get retail or dumb money traders to hand over their money. This is simply, remember we looked at this yesterday with the Asian and the Sydney sessions. No, Gerard, not because it can betray you, because it will betray you. So it doesn't, it's not just that it can betray you, it will betray you. That's exactly what it's designed to do. It's designed to trigger liquidity. It's also designed to find existing pockets of liquidity. And one of the things you will see happen quite a lot is, not every single day, but it happens quite a lot, is the Judas swing will find the opposite side of the Asian range. It will. Yep, Monica. It'll find the opposite side of the Asian range. On this particular day, it doesn't quite get there, but it's close. It'll find the opposite side of the Asian range and then go to the right direction. Now, when I first discovered this, before I found the work of a particular mentor, like I said, that I studied quite a lot about 6-7 years ago, before I saw his explanation of it, all I used to do was, when I cracked it for myself, first of all, with limited understanding, was that first move of the day, I would take it to the other side of Asia and get out. And that was my trade for the day. So if this day opened here, right? I was usually trading the 15-minute chart then, I would jump in here, put my stop loss there at the top of the 15-minute reversal, and I'd get out a few pips before here. I didn't quite understand what it was doing. I just knew that first move of the day wasn't going to last long, so I couldn't trust it. As I began to study other people's work and do more practice myself, I figured out what's going on. Again, on an European pair, especially on a day where Asia ranges. Now, this price action works perfectly well when you see a tight consolidation in Asia. For instance, we've had one today. Look at this today. Look at this today. That was the Asian range, right? That was the price at 5 a.m., 6 a.m. London. We see this sharp move up here. Why? Because there will be liquidity resting above there. Why? Someone's been trading in Asia saying, because I got that reaction there, I'm going to put my stop loss there. Also, there is a breakout trader somewhere who's read every single book on breakout trading and momentum trading, and whose indicators, let's see if I can, I'm not sure what it would look like today, but let's see if I can give you an example of how indicators will betray you. Oscillators, let's find one of the most popular ones, the stochastic indicator. Let's slap it on our chart, shall we? Okay. Okay, so today, not so today. Today, it's actually giving you a right signal. It's an overbought signal, so yes, it would have told you to go short. Okay, good. But there are many days where just where the Judas swing is forming, an indicator will tell you to do the wrong thing. It's happened several times to me in my past when I used to trade with indicators. And so, of course, as a trader, you see prices screaming up in one direction. You have no idea about institutional price action, about market maker philosophy. You just, oh, that's running, I'm just going to take it, and it will kill you. This is one of the reasons why I advise new traders, just stick to New York. Because usually, what have I just done? I've taken out, okay, usually by the time we get to New York, the Judas swing has happened. Price has made it very clear what direction it wants to go. And then you can catch a retracement entry in New York, which I'm going to show you. But if you have the ability to wake up at 5 a.m. London time, and two, you have trained eyes to spot this. Thirdly, you need to have a bias for that day, a higher time frame bias that gives you a direction to expect price to move in. You don't just jump in and say, okay, Asian range, Judas swing, enter. No. I'll give you an example of that. This day, let me see if I find it now. Because there are days where it will work both sides of the range first. Let me see if I can find a day like that where price will go to the wrong side for the Judas. In essence, price will have two Judas swings. Here's one. The 4th of August. Let's go down the 50-minute chart on the 4th of August. Now, first of all, let's establish this. 4th of August, our directional bias should have been bullish. Why? Because we had a daily stop hunt there, a market structure break to the north side. In essence, the high of that day, right, was taken out there. In fact, we don't even need the high of the day. The 4-hour high that drove the market structure break was taken out there. In essence, in this particular day, we have a bullish bias. But see what happened on the 15-minute chart. 4th of August, right? 4th of August. All right, so on the 15-minute chart, price first goes above this here and then comes beneath it. So which are you waiting for? Whichever was in your daily bias. Now, if you're taking the south trade, you would have made some money. It would have run you back into this order block there. However, the moment price broke this level here, I would have been very wary about taking this downwards trade unless I was scalping, because I have now triggered a daily reversal. And in the same day, we see price come back to where beneath where the price was at 5 a.m., 6 a.m. in London, form an entry there, and then move. So you always need higher time frame directional biases, but these principles help you refine them. So like I said, in London, you want to know what the price is at 6 a.m., 5 a.m. Pretty much, yes. Indications, not indicators. I like that. Your indications are from price action, not from just slapping an indicator on your chart. And so in London, we will usually expect to see a price reversal above or beneath the Asian range, or the Sydney range, the CBDR, in the direction of the daily bias. And on an up day, we want price to form the reversal above the price at 5 a.m., 6 a.m. London. On a down day, we want it to form the reversal beneath that price. Now, when I first started to understand this became my next strategy. The next strategy I followed after understanding this was this, because then I wasn't sure. So I would wait for price to form a high above that 6 a.m. price line and above the Asian range. And I would wait till it crossed the Asian range on the other side. Why? That would give me a market structure break. Let me take that away for now. Let me just put this in here. That would give me, think about it this way, the high of the Asian low, or the high or low, sorry, of the Asian range. That's a market structure break right there. Price went up, took out a stop hunt there, right? This level. Whatever. And then has broken price to the downside. Right? That's a market structure break right there. Can you see that? One. And then I would wait for Fibonacci retracement. Take a premium or discount entry. In this case, it'll be this entry here, going into this order block there, right? And then get out down there at either the 1618, the 121, or the 14.4 level, depending on where my retracement was. I have just given many of you a free strategy. Thank you very much. You're welcome, I should say. Now, I'm not saying that's what's going to happen today, but it very well could happen. It happens a lot of the time. You treat the Asian range as a stop hunt market structure break. Take the retracement at a discount if you're buying, or a premium if you're selling. If you don't know what those mean, watch the rest of our videos on this channel. And then, boom, wait for this. How do you know you're going to the 121 or the 1618? Well, one, wherever you retrace from. And secondly, where are the liquidity profiles on the other side? So for instance, today, I'm not saying this is going to happen. I'm just giving you a theoretical example. Don't come and say, well, this trade didn't win. There are other factors to consider. See that order block there? That would line up perfectly with the 121. You see that one here? This would line up perfectly with the 161.8. It's not the it's not the sexiest strategy in the world, but it's effective. This was my strategy for years. This was the first strategy that made me consistent profit in the markets. I'd wake up in London, and I'm very grateful to my wife for that season, because she did the school runs at that time, because she did everything in the morning at that time, because I was stuck in front of my charts, staring from 6 a.m. in the morning to 10 a.m. in the morning, waiting for that to happen. Let me drop to a 5-minute chart so you can see it real clear. These are the pieces of understanding that allow you trade a 5-minute chart with confidence. If you don't understand these and you don't know what's happening on the hourly chart and the daily chart, stay away from the 5-minute chart. It'll kill you. Speed kills. But now it makes sense why I can jump on. Why? Because, okay, I know what's happening. First of all, on a 1-hour chart, the day's opened up, right? It's a down day. Why do I expect it to be a down day? Well, let me show you why I expect it to be a down day first. If you come back all the way here on this particular day, I think this was Friday or Thursday last week, that was a stop hunt on a market structure break that took out the low of that day. So price stop hunted one day and took out the low of the same day. That for me is a bearish signal. Price started to drop, of course, okay? So by the time it finished dropping all the way and started to reverse, that entire Fibonacci range there yesterday gave us a discount entry. What happened on an hour chart in that day? We had a 1-hour market structure break. Price broke that 1-hour high and then broke down beneath the low that drove it. That is the low that sent price into that high. And if you want to be real pedantic, well, that's fine. If you want to say it's that one, okay, cool. It's obviously that one if you can see it, because there's a high candle to either side. But if you can't spot that clearly, or it's not clear enough to you, this one still works. But I'm going to use this one here because that's the textbook one. Right? So again, I am not guaranteeing you this trade will win. I'm just giving you an example. So if you then drop down, let's put that in blue because it's an intraday level. If you then drop down to a 15-minute chart or 5-minute chart, either of the two will work. Price has now come back above that line. That's the market structure break line level from there. This one here. In essence, we've had a bigger one in this direction. We've had a retracement. Now we're going, in essence, we're saying we've now got our long-term retracement. We're expecting price to now drop. Well, that blue line there is the level. Not you. That blue line there is the level. If you go to a 15-minute chart, let's get rid of the bigger Fibonacci so we can see clearly. We go to 15-minute chart. When the day opened, we want to know what the time is, right? At 6 a.m., 5 a.m. New York. That was the time here. This was where price opened up. In fact, technically, it was there. So that's, sorry, 5 a.m. or 6 a.m. London, midnight New York, whichever one you want to use. That's the time there. So we want to see a Judah swing that takes price above that level and preferably above the Asian high. We use the Asian high as our stop hunt, intraday stop hunt. We use the Asian low as our intraday market structure break after the stop hunt, right? Cool. In which case, we now have an expansion leg. If you drop down to a 5-minute chart, this is where you now drop down to a 5-minute chart so you can see it clearly. Now that you have your directional bias and your levels clearly marked out from a higher time frame, that was the expansion from the top of the Judah swing all the way down there, right? You're looking, let's get rid of that, for a, now we're going south, so we're looking for a premium retracement. Premium starts everything from 61.8 and above. The sweet spot is very, very nice, halfway between 61.8 and 70.6. We get it there. Also, notice this line here, right? This one here. I'm going to change the size of it so you can see what this line is, right? It needs to be on your chart from a higher time frame. So when you see it on a lower time frame, you know what it's doing. It's this one right here. Where is that? It was the larger market structure break that told us we were now going south. If on this day where we're expecting a London trade, if we see a reaction at that level, that is even more juicy. Two options. You can put your entry at either of the market structure break levels and your, your stop loss above the Judas high, or you can go for that 5-minute engulfing candle and put your entry just above there. So far today, ladies and gentlemen, you would have had 1, 2, 3, 4 to 1. This is how you scalp correctly. And all I've done is use the London time frame, London session characteristics. And so in 1, 2, 3, 4, 5, 6, 7 times, I mean 35 minutes, you've made 4 to 1. Go about your day. This is how I used to trade. Now I have a life. My kids are older. I've got to look after them, especially during this lockdown period. I don't have the privilege of, I've got other things to do. I run a charity. Some of you don't realize this, but actually I'm a leader of a church. Don't have time to wake up at 6 a.m. every morning anymore. Usually when I'm up at 6 a.m. in the morning, I'm doing something that I can't be in front of my charts for. So I had to give up this very lucrative strategy. Obviously, you will have losses. Let me tell you, you will have losses. But if you're making 4 to 1, it means you need to lose 4 times to wipe out 1 win. If you understand how London works, how to use Asia and Sydney to line up your London trade, you understand the Judas swing, you have a correct higher time frame bias, you are going to at the worst go 50-50. Let me repeat. There is no way you apply this correctly and you don't at least win 1 trade for every 1 you lose. At least. And as I've just shown you, 4 to 1 is conservative on this strategy, because if today gets to this level here, which we drew out, which is the 1618 level, let's see what that would be on a 5-minute chart using that entry. If we entered here, put our stop loss there, to get to here, we would have done 1, 2, 3, 4, 5, 6 to 1. Can I interest you in a strategy in which you make 6 to 1? I just given you one for free. Let me know where else you get that for free on YouTube. I've just given you one for free with all the parameters. Now, actually, I haven't given you all the parameters. There's some, like I told my students yesterday night, they kept saying, you taught so much in the morning, you gave all that for free. By the time we were done, 2.5 hours later in the night, they saw I didn't give anything near everything away for free. However, just using the free stuff alone. So I don't know how to say this. Can you please take those indicators off your chart? Young trader, listen to me. 13 years in, listen to me. When I started trading, I had hair. Now I don't have any left on top of my head. All my hair now is in my beard and my mustache. That's why I keep it. I'm trying to, remember the days when the hair used to be on top of the head, not beneath it. Take those indicators off your chart. You can put them back later when you fully understand how price moves, just to give you extra confirmation. But while you are trying to figure out what drives the market, take those indicators off your chart. Take the trend lines, the horizontal trend lines off your chart. Take the shapes and the pennants. I drew one yesterday to show you guys how a market maker will manipulate it. Take those off your chart and do the hard work. This is why people want to use indicators, because they are too lazy to sit down and study months of price. They want to, some idiot has told you that after 1 month of trading Forex, you're going to buy a Lamborghini and be posing with a half-naked woman or man if you're female. You're going to live the life, private jets and all that. They Photoshop pictures. They've hired vehicles. They spend £5,000 hiring a Bentley because they know you will sign up and give them £20,000 in one day. And it breeds greed. It breeds a desire to take shortcuts. It breeds people who don't want to pay the price to become proficient at something. I have lawyers. I have medical doctors in our school, in our trading school. They went to university for 3, 4, 5 years and then qualified over another 2 or 3 years. So to become a doctor or lawyer, you're spending between 7 to 9 years really of studying before you can truly say, I am now an independent practitioner. But you want to spend 9 hours of using indicators and be a billionaire. It is not going to happen. And all I'm trying to do, or we here are trying to do, and all any sensible, because we're not the only ones here. I'm not going to be one of those people who say, oh, no. There's quite a few people online who can actually teach you correctly. There's few, but they are there. And what we all have in common is this. We don't offer you shortcuts. We don't sell you lies. We don't throw you fancy indicators and strategies. We take you slowly, painstakingly. There is over 60 hours of non-analysis videos on our site, on our channel now. We're not talking about the analysis sessions, just the teaching sessions. Over 60 free hours. It's going to take you, in all likelihood, at least 6 months to truly understand slowly over and over again. But when you do, you end up with concepts and principles like this. So you can open up your chart any time of any day on any pair. And after 10 minutes, you can figure out what's it doing today, what's it doing this week, what's it doing this month. And then you become what we call our course, a market breaking trader. That's where we got the name of this course from. The Market Breakers course, because now you get the market. You can use it correctly to your advantage. You're no longer the market slave. It's now your servant. All right. Rant over. Let's go to New York now. So let's clear all this off our charts. Let's go to New York. Now, New York is just about to, well, technically New York has already started today, is the truth, because New York starts 9 a.m. Well, sorry, I said 9 a.m. It starts 6 a.m. their time. So the same way, my definition of when to start tracking London, London's open, is 6 a.m. in London. It is also 6 a.m. in New York. And at this time of the year, that would be 11 a.m. London time. For the other half of the year, it's midday London time. And so this is, again, why I have said to my students or everybody on this channel, you want to be in front of your charts 6 a.m. to 10 a.m. during London and midday to 3 p.m. during London. It's simply half of the year, 6 a.m. to 10 a.m. in London, the first 4 hours from the 2 hours before, and 6 a.m. New York time, again, for another 3 hours or so. It doesn't always happen. But on a day where you have a clear directional bias, where London has obeyed this rule of making a high, or sorry, of having a Judas swing above the open of price at 6 a.m. London or midnight New York, if you miss that move, so for instance, this would have been the retracement if you were waiting for the retracement. On this particular day, I wouldn't necessarily have waited for the retracement. I would just have waited for 1 hour engulfing. That would be this one in the right direction. And then we go. But if you aren't awake during London, 6 days out of 10, New York will give you its own Judas swing. Write that down. New York will give you its own Judas swing. Let me find a day where it did complete correctly. Okay, this day's perfect here. I want you to look at this, ladies and gentlemen. So this in hindsight, we now know is an up day. 1 second. Let me find 5 a.m. or 6 a.m. So that's right. So that candle there. This is where price was. There we are. At 5 a.m. London time. That's midnight. I'm just going to use midnight New York to stop confusing you. So we do have the Judas swing. In this case, it's a very small Judas swing, but we have it. Price expands here. Now, this day, we don't get a London retracement after it breaches the Asian high. So if you didn't get in down here or here, 1 second, let's see, what's the 1 hour? Yeah, that would have been it. Yeah. So if you didn't get in at the reversal in London, you're crying thinking I've missed that trade. No, you haven't. Why? Find 6 a.m. New York, right? That would be 11 a.m. our time in London. So that will be 1 p.m. on this server. This server, or my broker server, is 2 hours ahead of London at this point in time. So let's look for 1 p.m. No, 1 second. No. They're now an hour ahead. They're now an hour ahead because of a daylight saving. So let's look for 12. So fine. So this is it here. This is where price was at 6 a.m. New York time. One second. I'm actually confused. Sorry. 1 p.m. 1 p.m. 2 hours. Let me cross check that because I'm getting confused now. I'm sleepy. What's the time now? According to the server, it is 2 p.m. But I know it's 12 in London. So yes, so the server is 2 hours ahead of London time. In essence, it's there. So we're looking for 1 p.m. on this server, which is here. That's the 1 p.m. candle there. So price is up here. Well, wait for New York's own. Put that there to show you where New York started. New York started there. Wait for New York's own Judas swing. And where is New York's Judas swing going? It will be a Fibonacci retracement from the last fib move. So that would be the low. That's the high. Where is it? It's a 38.2. So we get a discount retracement there. We can now get aboard with the day. We don't, in essence, New York is giving us this entry here. We can now put our stop loss there if we want and make almost 421, or just put the stop loss right beneath the candlestick there, which would be a scalp, obviously. Put that there. And for the rest of the day, we can get 1, 2, 3, again, 421. So that's the first way you use New York, as a continuation of what happened in London. If you missed London because you were asleep or you didn't see it clearly, or you wanted to be sure that that was the Judas swing, and by the time you were sure, it never came back for you. The first way we use New York is as a continuation, a retracement back into London's range to give us another entry. However, there are days like this one here when New York is a clear reversal of London's range. Let me find a clearer one here. This is perfect, right? So as you can see, this would have been the London trade. That was London open time, midnight New York, 5 a.m., 6 a.m. London, depending on what time of the year you're in. We had the Judas swing. We had an explosion up. And then let's look for 6 a.m. New York. According to my server, that would be 1 p.m. So there, that candle there. In this case, you can see that the New York Judas swing was the opposite way. This is when New York started. Was the opposite way. Why was it the opposite way? Aha. Because there is a higher time frame liquidity profile that price has run into. Let's do our Fibonacci. This is why you need to know where you are in price on a higher time frame. This is why you need a directional bias. You don't just jump into lower charts taking any entry here and there. Let's go through this again. Remember, we said there was a market structure break there, right? Or stop hunt, sorry, there. And then price broke, in essence, it nicked the daily high and then nicked the low of that day down here. Below, at this point here, we've shifted into at least a temporary bearish bias until that goes the other way. We start drawing our Fibonacci's. That's the first high to low swing, right? That's the high, that's the retracement at a premium. It meets the 1618. That point, that low now becomes our next Fibonacci low. Where is the high? It's either here or here. Whichever one you want to use is fine. Here or here. Either will work. I'm going to use the top one because it's the safer one. This is the 50% level here. In essence, prices come back to a fair value level there. If you use this one, it's even more significant. Anyway, they're both 50, so that's fine. And I actually gave you guys this trade live in the group, right? I took it actually, and I showed you that I took it. That one there. That big wick. Remember I said if you see a big wick, a wick that's at least the size of the body of a candle, it's hiding a lower time frame order block or manipulation block. Well, there we go. Right? There we go. If you want to be pedantic, 1 second, you would put it there to there. That's the reversal zone there. Okay. Well, on this day in question, the 11th of August, in New York, we ran into that zone. Do you expect a higher time frame zone to just allow price carry on going the same way? The answer is no. And even if you weren't aware of that there, you're looking for okay, let's just get this away so I can show you this clearly. You're looking for a Fibonacci retracement into the last London swing, right? The last London swing would have been this one here. That would have been the last low in London prior to New York's open. That would be the high. You're waiting for price to at least cross the 50 mark and preferably at least cross the 50 mark and preferably cross the 38.2 to give you a discount entry. Ladies and gentlemen, beneath this level, is there a 1 hour engulfing candle that would have told you get into that trade? Show me the 1 hour engulfing candle beneath that level there. Now there's this one. That's why we say wait for the candle to close, right? This is why we say wait for the candle to close. We say wait for it to close. But you understand that you are currently in a downward swing on a daily time frame. So you are waiting for this from here to give you an entry. It's done that in New York. And it's not giving you a 1 hour engulfing until, one second, until it's completely taken out this low there. At that point, you know that day has switched. But even if you didn't have the higher time frame perspective, this would have been a fishy trade to take long. But if you had the higher time perspective, right? And like I said, I took this trade. I don't want to waste time, but I think I can go through the Telegram and see if I can find it. If anybody can find the trade on Telegram, please send it to me. The picture, so like we can put it up on the screen. So we come back there. This is 6 a.m. New York. That's the Judah swing that way into a higher time frame level. It breaks down here and then takes out that level as a market structure break. So it forms that low, goes back in, and then breaks down beneath it once and twice. The trade was saying, please come in. It was like a bus conductor in my native country I grew up in of Nigeria saying, hey, the bus is about to leave, get in. Now here in the US, in the UK and in the US, you're running for a bus and the bus driver leaves you before you get there. When I grew up, the bus driver waited for the bus to be full to maximize their profits because the buses were privately owned. And so they would wait for the last passenger and they'd be shouting, one more space, one more space. This is like that bus driver shouting one more space. In which case, this is now the range. That's the high. One second. Let's get rid of you and start again. That's the high. That is the low that broke market structure. There. Even if you didn't trust this one, it broke down a second time and then came back up and gave you a 61.8 premium entry. This was the point at which I took the trade. Let's see if I can find that trade. Because it all sounds good. Oh, yeah, I took the trade, but then the people, I know my regulars or the regulars will believe me, but there's always going to be some skeptic. I appreciate that. And in all fairness, I appreciate your skepticism. So let me find it. There we go. That is it right there. Does that look familiar? You see, it's the same day, 11th of August. You see that? Seventh of August, there, right there. That's the level there. That was my entry. There was the stop loss. And that was the exit as designed. See that there? That was using New York and its own Judas swing into a higher levels liquidity profile. I took the entry at the engulfing of the 1 hour candle, put my stop loss above that, and rode it for a scalp. Now, I eventually did move that stop loss on a demo account just to teach something. So I moved it on demo account to teach something, moved it too far until the trade came back. So it passed that point. But my point is, as originally constructed on my live account, you see that there. So I moved take profit, not stop loss. So that's on a 1 hour chart. That's the trade. That's the same trade on a 1 hour chart there. There you go. And did it get to its target? The target, remember, was just beneath this low here. Did it get to its target? Of course it did. Not only did it get there, that's exactly where it reversed. So this isn't hindsight, ladies and gentlemen. This isn't someone just picking out stuff that looks nice to show you. Nope. This is how the markets really work. And in specific for today, this is how new, and that's why I am satisfied as a trader. My time zone allows it. My schedule demands it. Let me repeat. My time zone allows it. My schedule demands it. Let me write that down on the screen for you. So important. Because this is how you figure out how to trade using institutional price action. So my time zone allows it. Actually, you know what? Let's put that on the slide. Let's put that on the slide. Use sessions that your time zone allows and your schedule demands. Right. Let's put that up there so you can see it. That's a typo. Kieran's not here to correct me today. Poor guy's probably sleeping. Use sessions that your time zone allows and your schedule demands. If you can only trade during Asia, I'm gonna now for those of you, for those of you in the course, I'm gonna show you in a private session how you can use Asia to trade Asian pairs. So if you're if your time zone and your schedule will only allow you to trade during the Asian range, there's ways to do it successfully. However, if your time zone allows you and or your schedule demands, one second, let's adjust that, and or your schedule demands, then restricting yourself to London and New York is an amazing way to get high quality trade opportunities. Let me repeat. If you can trade either between 6 and 10 a.m. London time or 12/11 a.m. and 3 p.m., depending on what time of the year, New York time, you will get high quality, repeatable, consistent, institutionally backed trade entries. Because you can use Sydney or the CBDR / the CBDR. You can use Asia as 2 levels of confirmation. You have your higher time frame directional bias. You're waiting for Fibonacci retracement, market structure breaks, stop hunts, all the good stuff. If you then want to slap on a Bollinger Band or a or stochastic on RSI that lines up with all these things to give you extra confirmation, so be it. Or if you want to use those indicators like a stochastic or an RSI or Bollinger Band to generate a signal that you then filter, in essence, you don't take that signal unless it meets these institutional principles, that also works. But you don't just jump in on a day and start trading every single 5-minute candle reversal unless you want to donate your money to the markets. And trust me, they have enough. They don't need any more. You also factor in what day of the week you're in. Are you on a Monday or Friday? For instance, today's a Friday. That's why what's going on right now is typical. On any other day of the week, price would have exploded to the downside probably, or maybe even to the upside. But it's a Friday. I need to check and see what news is coming out today. I haven't checked this morning. I woke up not too long before the session. So you factor in all these principles, all that we've been learning so far. And then you get to become, over time, not immediately, over time, a market breaking trader. Now, there's one more thing I want to show you before I close today and for the week. Now, there is a majority of these sessions are just free on the YouTube channel. They're just free for you there. However, what we've done for our students is we've collated the most valuable sessions we've done in order into a playlist. Now, the videos themselves are public. The playlist is not. So you need the link of the playlist to get it. We just thought, it took us days to do this. Watching every single video over and over again to figure out which ones went best in which order. And we're still tweaking that. But students, if you don't have this list, ask for it in Telegram. So far, there's 37 videos. There's another 4 to go. We haven't added the last 4 from the last week or so, or 4 from the last week that will be useful. They come up to about 60 hours, and they lay everything out in systematic order. Actually, one second. I think we have, we've adjusted some of this. One second. Let's see. Studio. By the way, if you haven't subscribed, please do. We'd be very grateful to have you subscribe to help us out. Yep. So we have added them actually. There it is. So 42 videos at this point in time. Go through them in order, please. Even if you've watched them before, one by one, go through them in order. They lay the case piece by piece, step by step, what to put before what, how to layer it up. Once August is over, we're done with this batch of teaching in August, at the end of August. So in September, you will not be seeing any more of these for a while. Because we're sitting down with our students to begin to practically develop these at your different experience levels into trade strategies, and trade systems that work for you. So we've already started doing that. Last night was one of them. We gave out some real key workable, actionable. Some people said they already started feeling rich after last night. Just don't be greedy. And that's what we're going to be doing starting from September exclusively. So we'll come to you once a week or twice a week with a free video. We'll carry on with the Traders Lounge. We're going to start the Traders Podcast again. But I think if you have 60 hours of free stuff you've got over the last year, I don't know that you need much more than what we would have given you by the end of this month. So, guys, if you're not a registered student, just watch all the videos. If you're a registered student, you get this in the right order, plus some of the secret ones that we haven't put up there. Now, the $1 million question is, how do I register? Well, first of all, this is what you get when you register. Also, starting from September, we're going to be exclusively now releasing, as opposed to releasing YouTube videos, we're going to be releasing Market Breakers course content. You have the first 3 sections. We're going to give you another 5 or 6 in September. This is going to be breaking stuff down to the nitty-gritty with theoretical slides that you can then put alongside these practical webinars. 3 levels: beginners, intermediate, and advanced. I think we've proven these concepts, right? And how to practically apply them. Tokwe and I are both professional traders. We both trade the markets daily. We're not just armchair critics. We've shown you live time and time again. We've given you trades that have panned out. Last year when I was caught up in the whole Instagram stupidity, I was calling trades to the pip and showing the results. I don't do that anymore because I realize it's a slippery slope. I'm not going to get into some competition with some 19-year-old in their basements who are doing that on a demo account, and then greed and arrogance start to seep into my trading. Teach how to trade like a market maker, and you get complimentary access to the kind of stuff that we did last night, which is a VIP Mastermind Inner Circle session. The VIP Mentorship, in essence, one-on-one. Our students can get in touch with us. We sit down, we look at your trade, we give you feedback on your results. We have sessions where you get to open up your charts and show what you're thinking. You get a personal mentor. We do psychology and mindset coaching, and that's about to ramp up in September. How do you become a successful person? Because if you have the internal reality of a failure, no matter how much you know about trading, you will still fail. I've seen people who could teach. I've seen people who I've taught over the years who learned every single thing I had to teach them, but they had a block in their brain because they did not think wealthy or successful. They kept finding ways to mess it up. Weekly and monthly analysis, we're going to be giving you at the start of every week and start of every month. We've done a lot of that free online at the moment on YouTube. We may or may not keep doing it for free on YouTube. We're going to say this week, these are the pairs we're watching. This month, these are the pairs we're watching. This is why. This one has done this. This one has done that. There's this trigger. There's that trigger. Look for this doing this week or that week. If you want to pay for personal tuition and you are on the program, it's heavily discounted. You're getting almost a 50% discount of what I used to charge £80 an hour when I started doing private lessons. You're going to get that for about 50. I still do that actually, £80 an hour. If you want me to sit down with you on your own, sit down. So you got to pay £80 for my time at the least. You get that at 50 quid if you are in the program. Referral loyalty scheme, we're about to launch that, where you can actually get a perk for inviting a friend or family member. And as long as they are on the paid program, you will get a discount on your tuition based on a percentage of what they're paying. I'm really excited about the Traders Village and the virtual trading floor. That's going to come towards the end of this year. We're trying to build an online platform that's like a virtual trading floor where we're hoping to get at least 1,000 traders over the first year, where you can just connect with other traders who are trading too, share ideas, give each other support, and all that good. One second, the music gone too loud. And all that good and wonderful stuff. And so that's coming towards the end of the year. And we're really looking forward to it. And of course, we've got the Mastermind Inner Circle as well. We're going to be giving signal services, but to people who actually understand how we're generating them, not just enter here, stop loss there, profit there. No. Now that you know the principle behind it, you can take it with confidence. We've got about 12 different strategies and trade models to give out over the next year to our Mastermind Inner Circle members. Customizable watch list. So based on what you trade, we tell you this month from how you like to trade, what your time zone will allow, and what your schedule will demand. These are the pairs you should be staring at. We're going to be showing you some higher level macro market and intermarket analysis using things like stocks, shares, futures, and options, and other institutional data to confirm what our trading ideas are. We're currently developing a couple of automated trading robots, expert advisors, and robots and signal generators. You get indicators and other tools, again, heavily discounted personal tuition and access to the Traders Village and trading floor. It's just something you can't beat. At the moment, this is our trading weekly schedule. This is going to change slightly in September, but this is our weekly schedule. You don't have to be at every single session. They're all recorded. They're all recorded and available on demand. So you get your own personal library that you get to keep for life, or at least for the duration of your membership. How much are we asking for all this right now? At the moment, the crazy price of $79.99. I have had students tell me I would have paid double if you asked. I'm like, dang it, man, I should have asked for double. But we've had some current students say, I'd gladly pay double this price for what I'm getting. And I'm grateful for them. Amazing bunch of guys. Also, beyond just the technical stuff, we're actually a real family of traders. We banter, we laugh, we do Zoom sessions with our faces. We tease each other. It's just a great community of people to be a part of. Good peoples, good vibes, good energy. Whatever word you want to use to describe it. A couple of them are talking right now. True gold mine, full of precious germs. Monica agrees. Yep. It's just an awesome community to be a part of, and it is growing. And so we want you to be a part of this growing community at the moment for £79.99 a month. Why? Because we want your input. We want your user experience. We're treating this as a beta program. Yep, Gerard, you're glad I'm a nice guy, right? That's a private joke for my our community about me being a nice guy. It's a private joke. We want you to help us design this. We're very confident in our material, but we're learning. This is the first time we're putting together a training program, and so the advice and the feedback from our students helps us develop it to become the best it can be. I have one student from last year when it was a free, just a free mentorship group, who's actually back on with us now as an instructor based on the progress he has made in his trading. And so we'd like you to grow with us. Hopefully in 5, 10, 15 years, some of you could be partners with us. We never know where it's going to go. But at the moment, for the first 50 people who sign up, it's going to be $79.99 a month. The moment we cross 51, we now know that we have enough people to help us develop it properly. That's going to go up to at least £120 a month, and probably even more than that, because we know it's more than worth that value. So how do you get in touch with us? Well, this is how you do it. You send us an email to israelkeysgroup@gmail.com, just stating that you want to find out about the information. You know the price, but we'll send you a full out information pack. You can also reach out to us on Telegram or Instagram on that number right there. We haven't been really active on social media because we've been focused on actually trading, but we're trying to get back on Twitter and on Instagram. The description in the video or the description, at the bottom of the description of this video, you'll find our Twitter handle and our Instagram handle. Just reach out to us, get in touch with us, say, hey, I found you guys on YouTube. How do I link up with this? All right, folks, that's it for me this week. Registered students, make sure your Telegram notifications are set, or your Telegram is set to deliver notifications. Many of you are missing out on when we're going live or when we're having Zoom sessions and you have to watch it afterwards. Like if you were on last night live, trust me, I don't know if the recording will do it justice. So make sure your Telegram is set to deliver notifications and you're checking them. Also for signals and trade alerts or learning questions throughout the course of the day. You don't have to be a part of our community. You can keep, we're going to keep a lot of the stuff on YouTube for free anyway. Just do us a favor, like this video and all our videos, share them, comment on them, not just in the live chat. When you rewatch them, I've got YouTube alerts on my phone personally. So if you ask a question on a channel video, even if it's a video from a year ago, if you ask a question, I will respond. One of us will respond to it. So let's get some engagement going down there. Of course, subscribe. We're currently at about 400 subscribers. We've been fluctuating between 390 and 405 over the last few days. I'm not sure YouTube is doing some algorithm checking or whatever, removing some dead subscribers. I don't mean the people are dead. I mean they don't engage. But we're roughly around 400. We want to get to 1,000 in the next month. Can we do that? Do us a favor. Watch the videos, like them, share, comment, subscribe. That in itself would be a membership because you'll be helping us get monetized. And when we get monetized, we can bring our community to Facebook. We can do so many other things. We can take advantage. And of course, we can get paid from Facebook. If we get paid more from Facebook, we'll perhaps give a little bit more for free on Facebook as well. Not everything, but more for free. All right, guys, that's it for me, Israel, this week. By the way, shout out to Talkbear. He's not been with us since Monday. Talkbear turned 40 this week. He turned 40 this week, and it was also his 14th year wedding anniversary. And so, Talkbear, if you're watching this, happy birthday, happy anniversary to your wife. We can't wait to get you back next week. Take care, everybody. It's been live hanging out with you. See you on Monday at 9:15. So 9:15 on Monday is our next session. Take care. Bye-bye.